Welcome to the Sykes & Company PA video blog featuring Ollin Sykes. Ollin, you're at the NCPA Convention this October, and I know one of the things that you're participating in is selling your pharmacy, planning for success, and you'll be talking about how to work with your accountant for a transition of your pharmacy. Tell us a little bit about what you plan to cover in that session.
Okay. Essentially, what we're going to be talking about is really deciding why it is you're looking for a transition to occur. Kind of dissecting the why behind it. Whose best interest is it in? Owners and the owners, the family. The correct timing for that event to occur. Then kind of diving into some of the tax, the debt, the cash flow critical issues for the pharmacy sale and why some of those items are key in the planning for that. And the planning for the sale of a pharmacy is so critical in terms of years, sometimes 3, 4, 5 years in advance that people need to consider and prepare for this. Is they need to make sure that they have the appropriate documentation, financial information, both timely and accurate, that they're involved with knowledgeable advisors, be it both accounting, tax, and legal. They can assist them in that process. Going to talk about also probably the three common financial errors that we find that most small business pharmacists have. And that'd be real quickly, lack of adequate capital for the size of pharmacy they have, the emphasis on cash balance of control, and frankly, no idea where the pharmacy stands, which gets back, which is so critical to begin to plan for that event. Obviously, in planning for that event, they want to be retaining some outside legal healthcare counsel to assist them in understanding what's going to be best in terms of selling of assets and or stock, and gaining an understanding of what exactly is going to be sold in that transition. Of course, that involves dealing with all the regulatory authorities and agencies and transferring ownership and the complexities that are involved with that particular situation, dealing, of course, with the state boards, the DEA, etc. Obviously, evaluating years in advance the tax structures for the possible optimization of that tax situation or possible sale. And then, putting in place any changes and some kinds of radical changes that need to be put in place years before all this situation is assessed as far as the valuing of that pharmacy.
And how much of an impact can it make in valuing my pharmacy? If I have a fairly healthy pharmacy, but maybe my accounting is not in great shape, how much of a difference does it make to clean up that accounting in advance?
Well, it's really extraordinarily critical, because one of the key factors in valuing a pharmacy is taking really what we refer to as EBITDA, which is earnings before interest, taxes, depreciation, and amortization, and recasting that, as we call it, for that particular pharmacy. And that so many pharmacies will have a lot of things inclusive in those expenses that if a new owner comes into play, they will no longer have. So anybody looking at the financial statements of your pharmacy, you need to make sure that the integrity of those statements is what it needs to be. B, they're accurate and they tie in, and C, that they understand and can dissect what's inclusive in those numbers. And you need to pull out essentially what I refer to sometimes as the trash that's in there, or some of the personal items, and just make sure that all that is accounted for separately, because that all affects potentially the valuation of the pharmacy in looking at some of the financial metrics that are used in that process.
In terms of the smoothness of the transition and the time that it takes, do you have a sense for if my records are a mess versus if I've really been working on it? How much more smoothly does a transition go?
Oh, my goodness. Just finished one within the last couple of months that the records and books were put together extraordinarily well. They came to us several years ago. They had somebody just out of the blue come in and make an offer to them, and we were able to pull numbers very quickly and recast them for some personal things they had in there very quickly. And within just a few weeks, we had this deal put together, and it was a very large multi-million-dollar deal. And they were not in that position 3 years ago when they walked in the door. And that's when it can make a humongous difference.
In terms of retirement planning as a whole, how important is it, if I own an independent pharmacy, to be working with my accountant years in advance of a sale?
Well, in that same instant case I was referring to, we had started retirement planning on a very large scale basis about 3 years ago with them, and they were putting in excess of $500,000 a year into a retirement program for the owners themselves, and we were able to do that for multiple years. So not only did they get the tax break on that, they got a tremendous amount of money put into a retirement plan, even though, albeit it was in a short period number of years, where they had other retirement programs they had done in previous decades that obviously added to the equation. But we were essentially able to wipe out their total taxation for the last 3 years with the amount of retirement planning that we were able to do. And at the same time, when we did the recasting for those numbers, at the tail end, we were able to add that back in and get the valuation for the pharmacy for the numbers we put in the retirement program.
That's fantastic.
It was a really sweet deal.
Thank you for joining us today. If you want more information or have any questions, please feel free to contact Ollin directly.